Good morning, and thanks so much for tuning into the trade setup right here on PQ Prime. I'm Neeraj Shah. Let's take stock of what's happening in the markets at large. First, the global news flow, the US markets, and the markets remain the top news flow. The markets have cracked, and Nasdaq futures have slid lower by another 1%. And one of the reasons could be that one, there is of course weak corporate earnings as well from Alphabet, for example. But the 10-year Treasury yield is back above the 4.95 mark. In fact, the last I saw, it was 4.96, and we'll get to that number in a moment. Some good news is that Ford and the United Auto Workers have reached a tentative deal as per the union. So for those car companies as well as suppliers around the world, this is an important number. The other pieces, the conversations between US and China seem to be increasing. Xi Jinping, for example, sat down with a state governor from the US yesterday, and we hear that Joe Biden will see China's Wang Yi on Friday during the Washington visit. So there are a lot of increased bilateral meetings between the US and China that are happening. Well, interesting times. But the markets will have none of it. They came off quite rapidly, I might add, 2.4% for the NASDAQ, the Dow, just a third of a percent. But the tech numbers or the tech stocks really cracked, which is why S&P 500 and NASDAQ had this wobbly move on Wednesday, and looks like from the scene of things that will continue today as well, because the Nasdaq futures are down about 1%. Like I said, the 10-year yield above the 4.95 mark, 4.96 as of 7:30 a.m. the last time that we checked. Volatility higher, dollar index at 106 half. So all of this is looking slightly wobbly from the immediacy perspective. Sure, this could cool off, as Steve Bryce was saying yesterday, that these are levels from which typically they would retreat. Let's wait and watch if that happens. The gift nifty, I'll be really surprised if it shows anything else but a corrective move. A quarter of a percent for now. Let's see if that worsens. Now, what happened on Wednesday is interesting, because and it declined for the fifth day in a row. The Nifty declined for the fifth day in a row to end at 19122, which is a 3-month low for the markets. The crack in the broader markets, though, was a lot smaller. Nifty small cap index, or Nifty small cap 100, corrected just about 0.24%, which is probably a respite at the broader end of the spectrum, though individual portfolios looked anything but good. And the heavyweights, Nifty IT and private banks, came down 1% each. Now, these are the sectors where everybody's saying they might want to look at. I mean, IT, yesterday we were speaking, Manish Sonthalia was saying that if IT looks great, private banks look great, but these are the ones which keep on coming off, and the valuations keep on getting richer relative to what they were maybe a couple of weeks ago. So that's the problem. So the trade setup, I think global cues are weak and likely to take a toll on the markets today as well. I'll be really surprised if there's anything else. Though, like I said yesterday in the trade setup, these are now levels. We are now reaching levels or at levels from where typically bottoms get created. Intermediate bottoms or long term is a difficult call to answer, but 100, 200 points here and there between 19,100 to maybe 18,800, 700, or what, that coincides, I think, with the range coincides with the 200-day moving average, is where, who knows, things could bottom out as well. Difficult to call it, time it, whatever it is, but we certainly in that fear zone. The bank nifty, though, continues to move in lower low formation for the third consecutive day, and that looks wobbly because of both private banks as well as PSU banks. PCR, though, yesterday dropped to 0.55, and now is at close to the Feb 22 lows of 0.54. Remember, this is what I was saying, that these are levels from which bottoms get created. Now, remember, a market started the uptick, I think, from March 18, 2023 or thereabouts. But before that, the numbers look wobbly. So it's just one fine day, you'll suddenly see a bottom. I'm not saying it'll happen today, tomorrow. I have no idea. But a bunch of indicators, quant indicators, PCR, etc., all of these are at interesting levels. Experts are talking of EMS, real estate, and Capex as themes to buy if valuations in some of these indices correct further. Yesterday, I think Andrew Holland was talking about EMS. A couple of other experts have told me that as well. So it'll be interesting to see what these sectors do if indeed valuations correct further. Do they see buying? Remains to be seen. By the way, so these are some liquid losers in yesterday's session. Look at the volumes that came up, for example, in a Bharat Forge or in Apollo Hospital. These are large liquid names falling on volumes which are 3 times averages. They are traded very well on a daily basis, and yet the volumes were so high. And the other problem was fund flows yesterday. Foreign investors net sold 4,236 crores, but the gross volumes on the sell side were 13,000 crores, and the gross buying was 9,000, which is why 4,236. The talk, unconfirmed notes of how in a hedge fund is winding up its India portfolio came about. These things don't play out in a day. Maybe it could get extended today or day after as well. You don't wind up $1 billion worth of book, F&O, cash, um, all put together in a day. So let's wait and watch how it shapes up today in terms of volumes. We'll be keeping a keen eye out for this piece. Big day for results, more so for consumption, especially after Nestle's analyst meet yesterday. Asian Paints, Colgate Palmolive, and Westlife all come out with numbers, so watch out for that. And then some banks. There is Canada Bank, Indian Bank, PNB, Awas Financiers, etc. All of this would be interesting names, and Dixon as well. So would be interesting to see what some of these do. Stocks to watch today, and I'll come to Axis at the end. First, Tech Mahindra, disappointing quarter. Jeffries lays out an underperform, and I think they sum it up very well. So I've brought that note as opposed to earnings. They say sharp 5% QOQ decline in CME vertical and single-digit margins were the key negative surprises. Continued pressure in CME, ongoing rationalization of portfolio likely to keep earnings under pressure. They cut their FY24-26 earnings estimates by 9 to 28% on lower growth and margins. Certainly look wobbly. IT is corrected quite a bit, but I wouldn't be surprised if TechM has a soft move today. What might take a body blow though is Jubilant FoodWorks, and I think the MK note summed it up well. So I bought on the MK brokerage note. They maintain the sell with the target price cut to 380 versus 450 earlier. Missed estimates on all front, and the MK note says that on the weakest of assumptions also it missed estimates, and it noted 18% lower PAT versus street estimates. That's quite something really. The top line grew only 4.5%. The growth moderation continued for the fourth straight quarter. The quarter three commentary was not encouraging either, which leads them to cut their EPS estimates by 18 to 20%, as I said earlier, and they remain conservative on the valuation multiple at 45 times versus the comparable average of 50 times during FY17 to 20 and the current valuation of 85 times. Not only is Jubilant's valuation expensive on such numbers, so there is of course an EPS cut because of earnings cut, and who knows, the street might get a bit sour on the valuations that it is trading at, and even those could correct. And I think these numbers lay importance on what maybe Westlife delivers today, and if Westlife also disappoints, then some of these pockets, despite the fact that consumption remains a high growth story over a period of time, currently looks wobbly. So watch out for Jubilant as well. I would believe that it's a stock that is very difficult to trade, is what most experts tell me, because on bad days it tends to do much better than expectations. But I think this quarter, these numbers lead me to believe that it would be an underperformer today. Let's wait and watch. Gulf Oil Lubricants, now some good numbers, or decent numbers, if you will, some of them at least. Gulf Oil, revenues were up 11%, margins 12.5 versus 11.15, reported PAT up 40%. Watch out for this one. Watch out for Share India Securities. All of these capital market plays have done well. Share India is no different. Revenues up 56%, net profit up 77%. Banari Amman Sugars did okay too. Revenues were up 17%, margins expanded 200 basis points, and PAT was up 81%. Rallis, I think mixed bag, but because revenues were down 12.5, but margins improved quite a bit. Look at that. Look at the margin performance for Rallis. I mean, the last number of quarters, Rallis has disappointed. On the revenue front, it's disappointed this time as well, but the margins have improved. The PAT was, as a result, decent. The only problem is most brokerages believe that going into the second half, the global agrochem market remains wobbly as the inventory destocking continues to be rampant. Prices continue to see a downward trend. Maybe Rallis may not show a good showing in the next quarter, but the margin performance was certainly good. And let's see if that is a shot in the arm. Chalet Hotels was extremely good. Revenues were up 26%, margins were up 40%, if I'm not wrong, and versus 34%. PAT up 131%. So I think that did well too. So do watch out for Chalet. In fact, the dart note on Chalet is interesting. They say they give some interesting data, including the point that the office portfolio, the last point, will become 4.5 times of what it is currently, driving that segment EBITDA contribution to 3 times, from 0.8 billion to 2.3 billion, which is very strong for Chalet. So do keep a keen eye out for that. Remember, the quarterly revenue is 314 crores. If the EBITDA becomes 230 crores for the year, that's a pretty healthy increase in contribution. So do watch out for Chalet. Some part of the stock move, as per the brokerage, has already happened. Re-rating has already happened, but more could be in store. The other one which did really well was Sona BLW Precision, or Sona Comstar, as the case may be, but however you call it. Revenues were up 20%, margins up 27 or 28% versus 24.6%. Really, really good showing. PAT up 34% at 124 versus 92 crores. The order book was at 22,100 crores, of which the EV share was 78%, which is pretty strong. Currently, I think they do only 27% of EV. So imagine when the EV share moves up, maybe the margins continue to do better. So watch out for all of these. Could do better. We'll have some of these conversations today on BQ Prime as well. Of course, on the market side, a talking point with Vaibhav Sanghvi. Ask Hedge Solutions. He's the CEO there. More importantly, they are experts in hedging. I think at times like these, it's important to get that. So watch out for that conversation. Some others today include the FNO show, Ask BQ, and of course, 8:35 very soon. You will hear from Tech Mahindra and Mohit Joshi, and Rohit Anand will be speaking to my colleague Tushar. So that's an interesting conversation. Dipali Goenka, Wellspun at 11 a.m. You won't miss that conversation on textiles. Sonata Software at 12 p.m. So that's the other interesting conversation. And like I said, a clutch of market conversations on Ask BQ and FNO show to give you the daily updates of what could be happening in trade. I want to tune in for those as well. Thanks for tuning into the trade setup. I'm sorry, can't take too many queries today because we're out of time, but maybe Ask PQ will take up some of these queries. Request you, if you have an urgent query which can't wait till tomorrow, please log into Ask PQ and ask my colleagues Alex and Smithy to take it up for you.